Both the JSE and the Rand appear upbeat this lunchtime. The much-anticipated quarterly labour force survey data is out, showing that the unemployment rate climbed to 30.1% in the first quarter of the year. Now, according to Stats SA, this is the first time it has hit this point since the introduction of the survey. To help us dissect the latest numbers and how the markets have reacted to the jobless data, we're joined now by Nolwandle Mthombeni, investment analyst at Mergence Investment Managers. A very good afternoon to you, and thank you for your time. Perhaps let's start with the unemployment rate, which is now sitting at 30.1%. What is your immediate reaction to these numbers?
So, the expectation was to be around, 29.5. So just a little bit higher than expected. Although we did expect there'll be an uptick, but this is just the first quarter of the year, and we know that the following quarter, this current quarter we're in, is going to show a much poorer number. So I think it's not really the bad news that are still coming, considering that a lot of retrenchments and layoffs have happened in the last 3 months.
I know this is a huge ask, perhaps a projection as to what the numbers might look like in the next survey, considering obviously that those numbers are the ones that will take into account the effects of COVID-19 on unemployment in the country. How huge of a jump do you estimate that this could take?
It could easily be anywhere between 33 to 35%. We're still seeing people, even after some restrictions being lifted, some companies cannot absorb the labor back into the workforce. So it could be as high as 35 on a very bearish scenario. So we'll be looking to see some much more even after level 3 is lifted.
So won't you take us through some of the industries that experience the most job losses? Are these in line with the expectations?
So, the biggest one was the finance sector, followed by community and social services and agriculture. So Stats SA did say that, between the last quarter and the first quarter, there is, a bit of an increase in uptick in unemployment. So, none of these are big outliers. I think, the interesting thing is that, since the lockdown was implemented on 27 March, obviously the finance industry has been the one that has actually been more operational compared to other sectors which have been completely shut down. So I imagine that going forward, the finance being the biggest share of jobs in this quarterly survey, it's probably going to be one of the least, as we see other sectors which are more impacted and more labor intensive, have a higher loss in labor.
And which of the sectors have preserved jobs?
So there were, in terms of, it was a broad-based actual, decline, but mining actually was the biggest contributor to the increase, a net increase in employment. So mining, surprisingly, was the one that actually didn't result in a detraction in the numbers.
And how have the markets reacted to these numbers, if at all?
So the market hasn't really reacted. Coming from this morning, the JSE has been trading over 2%, and this is largely driven by the resource sectors being a risk-on day, as well as Tencent having been up 4% in Asian markets. So that's filtering through in the form of Nasdaq and personal markets. And those have been really the two big drivers of the market being up 2%. But as far as, the Rand, for example, it hasn't reacted much to this number. But I think also, the biggest negative sentiment was really priced in when the Rand was at 19 Rand. So I think, markets really expecting this already.
Tomorrow we are awaiting the Minister of Finance emergency budget speech. What is the sentiment in the markets regarding this?
Well, I see there's been some leaks in the market compared to how bad the deficit will be. So I think, that was part of probably a ploy to kind of, set expectations. So I think, ultimately, we need to see the numbers, not just a few leakages. I think there's more to it that we need to see. And we also need to understand what the zero-based budgeting. So I think the market is just waiting to see, how bad the bad news is. And, we're not too far away from it.
Well, thank you so much, Nolwandle, for that market update on this day. That's Nolwandle Mthombeni, the market analyst at Mergence Investment Managers. Yes.